Russia attacking Ukraine. This is First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Morning.
Good morning. All right, let's take a look at Bitcoin. The CoinDesk Bitcoin price XBX index currently at $35,528. Bitcoin crashing about 9% over the past 24 hours. The CoinDesk Ether price ETX index is at 23.94. ETH also crashing about 12.5%. The DFX CoinDesk DeFi index is at 213. DeFi going down with losses of about 16.8%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, so Ukraine says a full-scale invasion by Russia is underway as explosions are reported across the country. Russian President Vladimir Putin is calling it a special military operation to demilitarize but not occupy Ukraine. Emily, this is dire news.
Yeah, and it seems like a lot of people, at least people that I've been speaking to in Ukraine and Russia over the past week or so, nobody really seemed to think this was actually going to happen, despite a lot of indications that it might. So, yeah, I think this has taken a lot of people by surprise.
In terms of the markets, Lawrence, Bitcoin's supposed to be a safe haven, not acting as a safe haven right now.
No, because you can't use Bitcoin. I think people are realizing that you can't use Bitcoin without electricity. And that's it becomes really clear that, hey, if for some reason your power grid gets bombed out and you want to get your coins out and do something with it, pretty hard. If your communications are taken out and you can't use the internet, it's really hard to use Bitcoin. Gold, on the other hand, is having a fantastic day because you can use gold when you need to. And that's what we're,
I think it's a little more than electricity, though. I think part of the problem with Bitcoin is that it's still just so volatile that, for a lot of people, even if they're freaking out about their own country's currency or the stock market, they don't necessarily feel safe putting their money into such a volatile asset. So I think it's a combination of both.
But the question is, why is it so volatile? It's so volatile because it's still a very speculative asset. It's the idea that this is going to be the future of money. It's going to be used in a system where the internet works, where power works.
Well,
and if you don't have all those things, people are realizing, well, wait, maybe this isn't necessarily what we think it would be or should be. There are other narratives that need to happen here for Bitcoin really to serve as a safe haven.
Right.
But this isn't it.
Well, we have a guest with us who is in Moscow right now. Emily, do us the honor.
Yes, so I'm very pleased to introduce Anna Baydakova, who is our CoinDesk's own investigative reporter on the ground in Moscow, who has done extensive reporting on Russia, Ukraine, and a variety of other countries. Welcome, Anna.
Hello, guys.
Okay, so Anna, I hope you're doing okay. What's the mood like now on the ground in Moscow? What are you sort of seeing right now from your perspective?
I think a lot of people are worried and scared. One symptom of it is that the ATMs in Moscow, at least, are running out of cash. It literally happened right before my eyes with 2 ATMs. It's like people just cannot get cash out of the machines, and obviously many want to. I think for many people, of course, the situation of a war, whatever they believe about it, whether they believe the official Russian propaganda or the independent media, which, by the way, are broadcasting two opposite pictures right now. But in any case, war is an extreme situation where everybody is concerned. Speaking about people of my circle, like journalists, artists, activists, civil activists, independent politicians, there is the sentiment is just the immense feeling of guilt, shame, horror, and anger, because everybody, like every person in their right mind can see that what's happening is insane. The war with Ukraine, the war between Russia and Ukraine is an absolutely absurd thing. These nations are very close. They share history, culture, literature. They share so much, and our languages are close, and people speak Russian in Ukraine. And it's just profoundly painful to see that Russia is attacking the nation that is supposed to be our ally, but it's kind of artificially made our enemy, and we're doing it right now. So that's very heart-wrenching.
Yeah, I imagine there's probably also some element of shock as well.
Yeah, there is a shock, and actually, many people didn't expect this to happen. Even the journalists who have been reporting about war, who have been reporting about the war in Ukraine since 2014, since the annexation of Crimea, when the proxy war in the eastern Ukraine started. Even they were telling, like, look, nobody, don't panic. This is not gonna happen. Like, the maximum they do, they would like place the troops along the border and use it for negotiation with the West to get some more, kind of geopolitical benefits. And I think most people wouldn't imagine it in their nightmare, in the worst nightmare, that there will be bombings of Kiev, of Kharkiv, of the main and the peaceful cities of Ukraine that are not even close to the border. So yeah, many people were taken by surprise, but I kind of expected that to happen because it just couldn't. What's been happening the past week couldn't end well.
Anna, thank you for joining us. I mean, this is obviously it's a scary day for both countries. Were people in Russia able to hear President Zelensky's speech in Russian yesterday that he made to the Russian people? Were they able to hear it at all? And were they? How was it received if they did hear it?
Well, they did, and many people repost, like some independent media put the pieces of that speech, which was in Ukrainian and then in Russian. The Russian piece of it was broadcast by some independent media in Russia, and I saw people sharing it on Facebook. And I mean, like my media bubble is a little bit refined. I haven't seen a lot of propaganda influence takes in my newsfeed, but many people are saying that the speech is really powerful, and it's hard to disagree with what Zelensky said. And some people told me, like people would text me, compare that to what Putin said. Like the difference is just, terrifying. So a lot of people heard Zelensky, I think, and I think his speech has been circulating in the social media.
We spoke to a lot of people over the past couple of weeks. We spoke to people who operate out of Ukraine, or even in the Ukrainian government. And the question I've asked them is that you have a lot of projects that are, particularly tech projects, that are joint Russian and Ukrainian, where the ownership or the management or staff, et cetera, are Russian and Ukrainian working together side by side. This has been going on for years. How will they work together now? I mean, is there a feeling, at least among the people who are in these projects, that the government's going to war mean nothing to them, or is there any streak of nationalism involved for people in the tech industry at all, or are they just saying, no, we're not going to pay attention to this? We work together.
This is part of the problem. How we gonna live after that? And tech startups, corporation, like joint companies, is just one part of it. It's incredibly unclear when this war stops, at whatever point, and with whatever result it stops. Like, how are we going to live with this going forward? Because not just in tech, as I said, that these two countries are extremely interrelated. Like, people have family members across the border. People have friends. I know a lot of people who I really like, and I'm very, I'm very warned about them. And I know that even though, as your Ukrainian guest previously rightfully said, that the war actually has been going on for the past 8 years. It started in 2014, but it was kind of in this proxy mode, and for a long time it was a frozen conflict when the breakaway region of Donbass just separated from Ukraine, and it existed in this kind of half militarized status, but the active war hasn't been going on. And I spoke a lot to crypto people in Ukraine, and I know that they have been working, like that there is plenty of collaborations, there are plenty of companies with mixed teams, and people, at least like many people, would not care. It's not that they would not care, but they would still collaborate even beside this war. But now, when the war is so open, it's not a proxy war. It's just the craziest format of the 20th century war with tanks and people in the ditches and shot planes and people dying and the civilian population sitting under the fire. I don't know. I really don't know how we will be able to. I'm not sure what Ukrainians think about it, and will they be willing to work with the Russians going forward? And this is just tragic. Like, what's happening is a catastrophe, because the very important, very organic ties between our nations are being destroyed now, and this is a catastrophe of a historic scale. And it will be, and it will have very bad consequences for Russia itself too, I think.
Earlier, we saw photos of Ukrainians fleeing the country amid the explosions that are happening across the country. Heart-wrenching situation. Anna, you mentioned that the ATMs aren't working, or some of them in Russia. So what is the sense in Russia in terms of, we're a crypto show, so it's interesting that people are not fleeing to Bitcoin as a safe haven, even though that's the narrative in the crypto community. So I wonder, in these times, what are people doing in terms of resources, thinking of finances and whatnot in Russia?
Well, let me correct you a bit. The ATMs are working; they just run out of cash very fast because people are withdrawing cash. And talking about Bitcoin, actually, I disagree that gold is more useful because, especially in the case of war, when you need to evacuate as fast as possible, taking Bitcoin with yourself is, a much more viable option than taking gold, and you don't need neither electricity nor internet for that, in fact. So I think, as your guest yesterday, Michael Chobanyan of the Ukrainian exchange Kuna, said, that many people are trying to buy Bitcoin now. I don't know what is the proportion of that of that buying wave in the whole situation. Maybe the big Western investment vehicles who bought Bitcoin just as they bought stock are are selling now just because Bitcoin stopped being an uncorrelated asset. Let's face that. And people who are buying Bitcoin in Russia and Ukraine, maybe they're doing through the OTC desks and the price is not affected dramatically. But also, it's, I wouldn't expect many people like fleeing to Bitcoin just because many people in both our countries don't really have savings. They don't have a lot of free money. And, that it's not the best situation to learn about Bitcoin, even though maybe it's a good one. But yeah, I would be curious to look at the on-chain data, like where the selling and where the purchases are happening geographically. But I think the picture is just very complex at the moment.
So Anna, how do the people of Russia, when they look at this, I mean, do they think that Russia can financially afford a major war like that with not an insignificant country like Ukraine? I mean, it's size-wise and population-wise. This isn't Georgia as it was a few years ago. This is a much bigger country with a lot more soldiers. Do the Russian people look at this and say, this is going to be expensive for us? Why are we doing this? Or, what's the attitude here?
Yes, people are saying that. And Ukraine is the biggest country in Europe with a big population, and it has been increasingly well armed by the NATO countries, by the Western countries in the past weeks and months. So obviously, this war gonna be costly regarding money, but mostly human lives. So it's hard to, it's very hard to say what Russian people say. Like, people in my circle obviously say it not just we can't afford it. Like, we have so much to take care of inside Russia. Like, there is just no place for a war like that. But unfortunately, many people are really affected by the Russian propaganda and the official narrative, even though, I don't know, maybe now it might be breaking, because when you listen to the Russian TV or any state-funded media or reporters, they would tell you how important it is to go into Ukraine to defend the Russian-speaking population there. And like, Putin used the terms demilitarization and denazification of Ukraine, which people might wonder what it really means. Well, that's the term from the Second World War. In the minds of the Russian leadership, we still exist in the situation where there are, some mysterious Nazis who occupied Ukraine, and Ukraine needs to be liberated from them. That's what Putin said.
Anna,
and
I'm sorry, go on.
Yeah, I mean, I'm just saying in this delusional world, some people do live in it.
And I just wanted to go back to just some of the amazing reporting you've been doing over the past few weeks. Before this crisis, there actually was a lot of big crypto stories coming out of Russia. For example, the Bank of Russia, threatening to sort of ban crypto trading. And then they were sort of overruled, I think, by the Ministry of Finance, who said that there would be crypto regulation. Meanwhile, Russia is pushing ahead with this digital ruble, which the Bank of Russia said a couple years ago could serve as a hedge against sanctions. Now, obviously, this has now been overtaken by a much bigger story, but I'm just curious if these pieces fit together in any way, sort of Russia's official attitude toward crypto and just kind of their foreign policy. I mean, is there a larger picture here in terms of where all these pieces fit together?
Well, obviously, when there is war going on, it's hard to think about crypto regulation. when the whole future, when the future of the country is actually, people can't imagine what's going to happen after that. Even what if crypto going to be regulated is kind of the least concern maybe for most. Actually, the Ministry of Finance has been advancing with its crypto regulation. The ministry introduced a draft bill into the Russian parliament I think a few days ago. It's interesting because unlike the Bank of Russia, the Ministry of Finance does not want to just ban crypto trading and mining in Russia. It wants to regulate it, but regulate in a very strict and, I would say, very restricted way. Because in this draft bill, as it looks now, I think we do have a news story actually about it already, or maybe it's about to come out. You are only the bill says that you can buy crypto in Russia, but you can only do it through a licensed exchange using your bank account, and you only can use a certified wallet. Whatever that means, that hasn't been specified what a certified wallet is. But obviously, the Ministry of Finance wants to make all the crypto activity very controllable, very surveillable, and kind of restricted. Yeah.
All right. At the same time, we're receiving reports from Reuters that the Taiwan Defense Ministry has saying that they've had to warn away 9 Chinese aircraft that entered its air defense zone at the same time that Russia has invaded Ukraine. Of course, Taiwan, in a similar position as Ukraine, believes in their own independence. China disagrees. So this is a developing story we'll continue to monitor. Anna, thank you so much for joining us. Please stay safe. Heart-wrenching situation. That was Anna Baydakova, CoinDesk reporter in Moscow. All right, coming up, a crypto markets update with trading educator, Marketgauge Group. That's next. Time for a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is at $35,413. Bitcoin plunging about 9% over the past 24 hours. The CoinDesk Ether price ETX index at 2387. ETH is also plunging about 12.6%. The DFX CoinDesk DeFi index at 213, retreating about 17% over the past 24 hours.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
All right, joining us now to discuss the crypto markets is Michele Schneider, managing partner at trading educator Marketgauge Group in New Mexico. Welcome, Michele. So we are seeing the crypto markets crash right now. Bitcoin, of course, the narrative was supposed to be digital gold acting as a safe haven. We're not seeing that right now, are we?
No, and this really goes back to a conversation we probably had a year ago on the Bitcoin versus gold debate and people thinking that gold was dead. And obviously everything surfaces cyclically when it's got its due, and clearly with geopolitical concerns and this runaway inflation, what we're seeing is exactly that. Gold now is shining, literally, and Bitcoin is having some issues. However, let's step back on this Bitcoin thing, because we really, I think, amazingly are still holding a very critical level here at around this 33,000. And so that actually could be some kind of a good signal if it continues to hold. I wouldn't go flying in and buying these dips. Obviously, people in the equities market have done that, have now really suffered. But I would really be keen to see not only if Bitcoin can hold here around 33, but even Ethereum in January traded as low as 2150, and we're above that now. So we're heading into this support, which could be good news going forward.
Going on for quite some time, though, of Bitcoin being a safe haven, of Bitcoin being a hedge against inflation. Our inflation rate now is 7.5% year over year compared to last year when it was 1%, 1.2%. We have a major war underway right now in Europe between two of the largest countries there. And what do we see? We see Bitcoin is off its all-time highs. We see it's off its all-time highs, even, at a time when inflation's high, at a time when there's warfare. These narratives don't seem to necessarily hold right now in a time of crisis. Does that have a long-term effect on how people view Bitcoin as those kind of assets? Does the narrative need to change for it to add value, or will this have a long-term impact on people's view of crypto to the point that they say, you know what, this isn't necessarily what we shouldn't have been buying into this this theory as we have been over the past few years? Does it have a negative long-term impact?
Well, I think you have to look at herd mentality as definitely influential, but also at some point very ephemeral too. It changes on a dime. So yeah, I mean, for a year or more, we were all about Bitcoin, Bitcoin, gold dead, gold dead. Now we're seeing that reverse. So if you take that same sort of flip of herd mentality, we could easily see that go back, especially with now considerations about sanctions on Russian banks and the whole SWIFT global interbank payments. That's been on the table as one of the ways to create a sanction that would not only really hurt Russia and Russian people, but also probably backfire on Europe. That could actually be good for gold, but we're getting into this, it's either or. There could be a point where people realize that Bitcoin still has its value because it's decentralized. It goes away from the traditional banks, and this type of manipulation that we can see with fiat currency and with banking regulations. At this point, we still don't have these crypto regulations, could actually come back and bring crypto back to favor. So I think you have to look at each thing individually for its merit. And yes, we have the unwinding now where Bitcoin's going down and gold's going up. But that doesn't, again, I don't think we necessarily have to think about this as, Godzilla versus King Kong. I mean, one's got to win. I think they both have to be looked at for their own individual merit.
Yeah, except that gold is up at a time when inflation is up, as we've seen now. I mean, that in many ways, last year, we were saying, oh, well, look at gold, it isn't going, and yet we're having all this spending. But the inflation rate hadn't increased because the multiplier in which that increased dollars into the economy didn't necessarily translate at the time to higher prices. Now it does, and people have taken to gold. So my question, though, is, do these narratives persist? And these are narratives that have been pushed repeatedly by the maxis, by people on Twitter, by the influencers, saying this is the safe haven, this is the hedge against inflation. And a lot of retail people bought into it. A lot of institutional players bought into it. You could find hedge fund managers say, yes, this is the way we're fighting inflation. And yet here we are, this far into the inflation rate in the midst of a war, and the prices are off the all-time highs. So I guess my question is, do those narratives persist long after the war has stopped, Maybe perhaps inflation is tamed at some point, maybe not. Do these narratives persist?
Well, I have two comments on that. First of all, I think the warning here is that in terms of these narratives and in terms of the talking heads and the analysts and the Twitter influencers, et cetera, I think the lesson here overall should be that you better learn to think for yourself and really understand some type of technical analysis, at least enough to make some decision before things have totally crashed. And one of the narratives, for example, was buy the dip. And, I was going on media saying, well, what does that mean? At what point is the dip? Okay, so we don't know. So that's number one, is I think people hopefully learn to think for themselves a little bit more. To talk about gold and inflation, it was so undervalued. And that's why I was talking about the fact that we should not dismiss gold. Let's just look at 1980, where the Dow was and where gold was. Okay, 1980, which was the pinnacle of inflation, right? Gold traded up to $850 an ounce. The Dow was at 1,000. So now here we are, 2022, gold has doubled and the Dow went to 33,000. So 33 times. So just in terms of value, silver even worse. So just in terms of you're looking at the rate of inflation versus what gold did, what the Dow did, and then, of course, with the actual 7.5%, which now is looking more like 8%, gold was a bargain. And it took a long time for people to figure it out. And now, of course, you're going to get that shift into herd mentality like, wow, well, based on current valuations, gold could go up to 5,000. We're already starting to see that. Whether that happens or not remains to be seen. And of course, getting back to Bitcoin, what impact does that have? At some point, Bitcoin will start to look more valuable because of its historical price action. So, this is why passive investing is dangerous. Listening to people and making trading decisions off of the narrative is dangerous. And learning to think for yourself a little bit and just step back and understand what value is and how things can shift is also extremely important. I think these are the big lessons that we're going to see here in 2022.
Michele, finally, anything interesting happening in the alt markets? Because we're talking a lot about Bitcoin. Are we just going to see another sort of sea of red where everybody just kind of like all the other coins follow Bitcoin's lead? Or do you think we might see some sort of breakout or different performers in the alt markets?
Well, I think right now you really have to look at the large caps, at Bitcoin and Ethereum, to make the decisions in terms of the altcoins. That doesn't mean something couldn't emerge. Certainly, Decentraland Mana is still something, even though it's come off a lot, could at some point prevail. Solana, which still, again, has not reached its January low, could come back. All of these things could come back, but I think they will struggle until we see a sign that Bitcoin and Ethereum in particular have subsided and have found some kind of floor of support.
All right, Michele, thank you very much for the update. That was Marketgauge Group Managing Partner Michele Schneider. Coming up, 4 crypto tax myths you need to know, plus global policy and regulation update with our CoinDesk Managing Editor, Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. All right, Nick. So Russia has attacked Ukraine. U.S. President Joe Biden, he was right all along. Attack was imminent, and here it is today. He said that this will lead to a catastrophic loss of life, and he is promising severe sanctions. What do we know so far?
Good morning. Yeah, so earlier this week, the U.S. unveiled a number of sanctions, but they were pretty targeted at certain Russian entities, including VEB, a major bank. It's a development bank, rather. What it seems like is going to happen now is we're going to see an expanded slate of sanctions that are going to further target Russian banks and oligarchs. So, we might see, for example, property belonging to Russian officials be put on the sanctions list. The key thing here does seem to be that these are going to be targeted towards Russian officials or oligarchs. It's not going to be, we don't yet see any sign that it's going to be a broad, cut Russia off from SWIFT or just, sanction the entire country at this point. So the administration does seem to be kind of focused on, targeting the leadership in Russia. And we're also seeing sanctions from a number of other countries and blocs, the European Union, South Korea, Japan, Canada. They have all announced sanctions of their own that are either going to be implemented in the coming days or have already been invoked.
Nick, just to turn the topic for a moment, there were expectations that Biden was actually going to release this big executive order on crypto. Obviously, that's been overtaken by more urgent events. I'm just wondering if you have any intel on this. Just haven't heard anything. Do you think this executive order is just going to be postponed indefinitely while Biden deals with more pressing matters?
So I haven't heard anything this week, but last week when news of this executive order was circulating again, the word was that, the Ukraine situation would put this on the back burner. Unclear how long. It doesn't seem like this is going to be an indefinite postponement, rather probably a couple of weeks or a month or two before this is, signed and sealed and delivered.
Is there any further information on what NATO allies are doing and, how those conversations are going and how they will be addressing this crisis? And I understand as well that there are some U.S. troops positioned in Poland. They're accepting Ukrainian refugees. Do we know anything further?
So there's, I guess, two fronts here. One is the sanctions side that we've already discussed. The other is we are seeing a number of NATO allies discuss military options, including whether they should be defensive or if they should deploy troops and or aircraft, ships to the front lines. And we're seeing, for example, a handful of U.S. fighter jets, F-35s, have been deployed to forward locations out of Germany. We've seen military aircraft. We've seen the militaries of a number of countries, kind of get on a heightened alert status. So, whether that's indicative of any imminent action or not is unclear. But, certainly these countries are looking at military options. If for no other reason, then this is a, massive act of aggression. And these countries are all going to want to make sure that they can defend themselves should they need to.
And CoinDesk will certainly be continuing to monitor the situation. Nick, thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right. With the U.S. tax deadline around the corner, April 18th, confusion about cryptocurrency taxes abounds. Joining us now to discuss some of the ways you might have your facts wrong is Dan Hannum, Chief Operating Officer at ZenLedger. Hello there, Dan. So as part of CoinDesk Tax Week, you've written an article to distill 4 myths about crypto taxes. Lay them out for us.
Yeah, thanks for having me. Obviously, we've seen a tremendous increase in compliance rates with crypto taxes year over year, but we still see a lot of the newcomers coming into crypto taxes that are just unsure about how crypto tax is handled. The biggest misconception that we still see is that if you are investing in crypto and only going from crypto into other crypto, that there's no taxable event. But as most of us in the industry know, when you are going from crypto to crypto, whether that's ETH to Bitcoin or Bitcoin to Uni or providing liquidity pools or buying NFTs, there's taxable events along the way. So that's kind of the biggest misconception that we will see, is that a lot of the newcomers will think that only by selling your crypto back into dollars will you see a taxable event.
So, Dan, welcome. So exactly how is this done then? I mean, they're going to tax you. How are you taxed beyond fiat? Your very first myth here is that you're only taxed when cashing out to fiat. So what exactly and how does the IRS calculate it when you go into other crypto, et cetera?
Sure. So you'll have three main buckets of crypto tax. You'll have fiat going into crypto, which is generally a non-taxable event. You can put as many dollars into Bitcoin or as many dollars into ETH as you'd like. You'll then have crypto to crypto as a main bucket, and that's going from Bitcoin to ETH or ETH into USDC or your crypto of choice. And then you have the main bucket of going from crypto back into fiat. And so the second and third buckets, crypto to crypto and crypto back into fiat, will be taxable. The second bucket of crypto to crypto is a pretty encompassing bucket. And what I mean by that is you can have items like going from Bitcoin to wrap Bitcoin or WBTC, or ETH into STETH, or providing liquidity where you'll have two assets going in and another new asset coming out. So mainly the capital gains happens in the crypto to crypto. And that happens a lot with a lot of the newcomers that we're seeing coming into the industry, especially around NFTs. They'll use ETH to buy an NFT. They'll sell the NFT back into ETH. And those are both taxable events along the way. And then you have more income generating events like staking income or airdrops or forks or interest bearing accounts like a BlockFi or a Celsius or Nexo, or more of like the decentralized finance interest bearing accounts like a Compound or a Uniswap. So there's a few different factors to be aware of as you're moving through your crypto investment journey.
Dan, just quickly, have there been any major changes in the tax rules from last year to this one that people should know about?
Not any major changes. The most recent update we've seen is the Jarrett versus IRS case, in which a couple had gone against the IRS to essentially get better guidance on if staking rewards should be treated as income at the time of receipt. That case is still going through tax law and tax court. So at this time, we would still recommend for individuals to be filing their crypto staking income at the time of receipt on their Schedule 1. But that's the major big change. The other item that we've seen over the last year and a half is the IRS has moved the question of have you ever bought, sold, traded, or acquired virtual currency from the Schedule 1 to the top of the 1040. So now every single U.S. citizen and tax professional, the very first question they need to check off if they've interacted with crypto. So we've seen a bigger compliance rate in that. Now we've also just seen a massive increase in the number of users, not only on the consumer side, but on the enterprise side that are getting involved within crypto. And they're looking for software solutions to be able to easily adapt to the existing regulations.
So, Dan, your second myth, of course, is that the blockchain isn't anonymous, that the IRS can trace, rather, this is not a myth, but this is the fact, is that the IRS can trace the transactions. How do they go about doing that?
Yeah, great question. So I think that's a big myth that we see is, I am using MetaMask or Phantom Wallet or Rainbow Wallet, and anything that I do in that wallet or on chain has no taxable consequence and it can't be traced. If you've ever used Etherscan or BSC Scan, you can see that when you enter in an address, you can see the inflows, the outflows, the fees, what you did, where those assets were being sent from. And so the IRS can really look at that on-chain activity and really understand what's going on through your wallets. Typically, how the IRS can associate that wallet is that for most U.S. citizens or global citizens, they still have a fiat on-ramp where they're taking dollars into crypto for the first time. So a typical journey may look like a user goes from dollars into Ethereum on Coinbase. They then sign up for a MetaMask account, and they send their ETH from Coinbase into MetaMask. So they have a KYC account with their name on it that is then sending those funds into a on-chain account. And so the IRS can start to put those items together, and then you can, using that on-chain analytics, you can start to see where that MetaMask account is interacting. And then the IRS is obviously investing billions of dollars into tax software, not only on the taxation side, but also on the blockchain analytics side with companies like Chainalysis or Elliptic or Ethereum Labs. So they have the not only manpower, but now software to be able to track these on-chain activities.
Mm-hmm. All right, Dan, I see, myth 3, there's no way to lower taxes once transactions are made for profit. Myth 4, you only need to import data for the year of taxes you're filing. Those are all myths. And folks, you can read further on CoinDesk.com. The article by Dan is 4 crypto tax myths you need to know. That was ZenLedger COO Dan Hannum. All right, let's take a look at crypto Twitter for our tweet of the day. This one from Russian-Canadian co-founder of Ethereum, or founder of Ethereum, really, Vitalik Buterin, tweeting in Russian, very upset by Putin's decision to abandon the possibility of a peaceful solution to the dispute with Ukraine and go to war instead. This is a crime against the Ukrainian and Russian people. I want to wish everyone security, although I know that there will be no security. Glory to Ukraine. He also added, reminder, Ethereum is neutral, but I am not. That's it for First Mover. Thank you, Emily Parker and Lawrence Luton. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and all about Bitcoin at 3 o'clock Eastern. You're watching CoinDesk TV. Also, next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Russia's President Putin has announced a military operation in Ukraine, and markets are not happy. Welcome to the Daily Forecast, February 24th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, Ukraine's foreign minister has said the country will defend itself and has asked the world to help after President Putin's announcement of a military operation in Ukraine's Donbas region. We're going to take a look at the crypto market's reaction and a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Kicking off with a look at the crypto market, it is a sea of red in the crypto top 10 following President Putin's surprise television address announcing a military operation starting in Ukraine. Forecast's Carolyn Wright reports.
Crypto markets have had a tough couple of months, with investors cautious over rising tensions between Russia and Ukraine. And now a military operation in Ukraine has been launched by Russia's President Putin. The White House has reacted by announcing a meeting of G7 leaders to discuss further consequences to be imposed on Russia as a result. Bitcoin reacted by sliding just over 9% to trade at $34,461 by Thursday lunchtime in Asia, and it took most other major cryptocurrencies down a similar amount. However, one exception is Terra's Luna, which had fallen just 2% by the same time in comparison. That could be down to the Luna Foundation Guard raising $1 billion for a forex reserve denominated in Bitcoin for UST, Terra's biggest stablecoin, via an over-the-counter sale of Luna tokens. Overall, the Bitcoin Fear and Greed Index that indicates how worried investors are using data including volatility and trading volume remains at extreme fear. One expert told Forecast that while a knee-jerk reaction was to be expected in such a cautious environment, it's not all gloom and doom.
The initial reaction of a lot of people will be, I don't know, and therefore I'm going to take risk off the table. And then I think probably a number of other people will probably come in and say, well, I don't think it's going to be too bad. And we could well see some bargain hunting by the end of the day.
For Forecast, I'm Carolyn Wright.
Let's take a look at what else is happening around the Asia-Pacific region today. First up, Japan's largest bank says it is giving up on its blockchain payment venture. Yep, Mitsubishi UFJ Financial Group is preparing to halt and liquidate Global Open Network Japan, which it set up back in 2019. Now, the financial conglomerate says the closure is due to the harsh business environment caused by the pandemic and that commercialization of the venture was actually taking longer than it expected. Now, earlier this month, MUFG announced plans to issue a stable coin pegged to the Japanese yen next year. That apparently is still in the works. Meanwhile, mixed messages from Hangzhou in China over crypto mining. Has there been a change of heart over the mining ban? Well, confusion arose after the government in the eastern Chinese province of Zhejiang announced an increase in electricity prices specifically for crypto miners. I thought they banned it. So it actually raised the question over whether the ban had been lifted there. However, it has now been clarified that the increase was intended as a penalty measure to support the ban, rather than indicating that mining is allowed again. China did ban crypto mining last September, sparking a mass exodus of miners from the country. However, state-backed media said recently, in December, that small-scale operations still exist in secret. You can find those stories and more at forecast.news. Well, there is a definite chill in the crypto air. Coins like Solana and Polkadot have lost half their value in the last 2 months, as the markets at times have appeared to be in a free fall. What does this mean for investors, and is there a play to be made here? Justin Danathan, Institutional Sales Director at the Amber Group, joins us to chat about the outlook for the new economy. It's great to have you with us, Justin.
Thanks for having me, Angie.
All right, okay, let's talk about Vitalik Buterin, co-founder. We all know this guy, legend, right? Co-founder of the Ethereum blockchain. He recently said that people who are deep in crypto are actually welcoming a winter or cooling prices, as it can help weed out unsustainable projects. What do you think?
I couldn't agree more. And I think when things have gone up for a long time, it's healthy for prices in any given market, but definitely in crypto markets, to cool down, right? It flushes out some of the traders that might have been over leveraged. It gives an opportunity for new entrants to allocate capital. But the second part, and I think the thoughts that Vitalik Buterin had in mind when he said this, is that during a bull run and periods of enthusiasm, there's a lot of projects that will launch. And within those projects, probably a chunk that aren't adding that much value to the space, or maybe don't have the tech foundations to survive long term, or even a competitive edge that means they're worth allocating capital to. And so in crypto winters, or when prices go down, it forces investors to reassess their risk profile and essentially the quality of the investments they're holding.
Yeah, no, I absolutely agree. It is good for the industry. I always say it's about credibility and quality. But, you know, a lot of people are seeing this price trend right now, the last 8 odd weeks, as a mirror of the trend that we're seeing in the broader equity markets, geopolitical tensions. Is it a fundamental shift? What are we seeing as crypto assets go down? Is it a mirror of all of these three things?
So my assessment is that the fundamental strengths of the crypto space haven't waned in any way. They're still as strong as they were before, definitely as strong as they were just a few months back. On a longer term basis, Bitcoin and crypto assets tend to be very uncorrelated assets, so they don't move at the same pace as other assets. But on a short-term basis, they're considered as risk assets. And so when there is uncertainty in markets, whether that's due to geopolitical tension, which you mentioned, so Russia, Ukraine right now, or the Fed raising rates, essentially tightening their balance sheet, it forces investors to think, well, maybe we don't have as much abundant cash as we used to, and it's a time to go back to cash, so sell some of the stocks, the real estate, the crypto or other assets, go back to cash and wait for things to clarify. And I think that's what will happen relatively soon. At least we will get some kind of clarity on the geopolitical tensions and also on the objectives from the Fed. And as soon as there's more clarity, regardless of whether it's positive or negative, I think you will see investors more willing to take new bets across various assets, and that includes crypto.
Well, certainly at these prices, it's a lot more affordable to get in. Lastly, institutional presence in digital assets is getting even stronger. You know, you could say they're seeing an entry point. But reports say that BlackRock plans to offer crypto trading services as well. Your take on old school firms making their presence felt in the new economy?
We're naturally very excited about that, right? First, because of the capital they deploy in the space, obviously, but also what it means for the asset class in terms of legitimacy and the path that it opens for a wide range of new investors that might now look at the value of crypto or how they can get involved and so on. Now you're seeing maybe bigger names jumping on the bandwagon. I think they're slowly realizing that Bitcoin and crypto assets in general are a thing, that decentralized finance is gaining adoption, is gaining traction, and that they need to get involved in order to to stay relevant. But I do think we've hit a point of no return, which is great. And then maybe on another point, another thing worth noting, and that's very supportive for the space, is a lot of companies that do want to get involved in the crypto space do that by investing in crypto companies, so the projects themselves, as opposed to necessarily trading the coin. And there's a lot of capital that has been coming in the past 3-6 months. And ultimately that translates into prices because all those projects are very well funded and can grow sustainably.
We are experiencing that. We're seeing that ourselves in the VC space and beyond. But you are seeing this mix of the old economy mixing into the new economy. Justin, thanks for the insightful conversation. Really appreciate it. And that's the daily forecast from us right here in Asia to you all around the world. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.